You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. Pleased to have you joining us here live, 1 p.m. Central, 2 p.m. Eastern, here or after the fact, wherever you get your podcasts of choice. We don't judge. Android, Apple, whatever you get, Spotify, whatever you like to use to listen to. We don't judge. As long as you listen and keep those questions coming, we do indeed like to hear from you guys. And joining me on the program today, first off, holding down the MIAX hot seat, as you might imagine, those folks a little bit busy right now because the futures are launching in, 3 days. So those guys are running around like chickens with their head cut off, trying to get the last I's dotted and T's crossed. So you guys, by the time we have a show next week, we can have an actual future to sink our teeth into. How fun will that be? So looking forward to that. In the meantime, though, holding down the MIAX hot seat, he's squirming a little bit. It's hot. It's uncomfortable. It's our old friend, Mr. David Lincoln, from formerly of the Short Vol Show, now of VIX Crush fame / infamy. Dave, welcome back to the Volatility Views program.
Thanks, and thanks for having me. It's exciting to be back here in the MIAX hot seat.
Hope it's not too hot, not too uncomfortable for you, sir.
No, I'm grateful to MIAX because they've actually been on the other side of a few trades that I've done recently. So they are making markets as well as doing the spike. So happy for them.
There you go. MIAX keeping folks happy out there as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the program where we break down what the heck's going on out there in the world of volatility, the trades, the trends, the analysis, the unusual activity, all that good stuff. Coming into the show here, we're seeing the markets once again caught up in this euphoria, trade war earnings, call it what you will. Something's driving us north here today as we round out the week. Most of the major indices up pretty strong, up about 0.5% or so. NASDAQ leading the charge, up nearly 0.2%. Gold taking a break. Crude actually getting a little bit of lift. WTI up nearly a full point, nearly to 58 out there, which is kind of interesting. A little bit of resurgence out there in WTI, of course, probably trade war related. We all know lagging demand out there has been a concern for some time. Check out TWIFO. It's hitting the network, the podcast, at least as we speak. So not right now if you're listening live, but after this, you can go listen to TWIFO and check out our deep dive into crude and equity vol. We just have a lot of small cap vol actually on that show. So if you like equity vol, it's a good place for you to go as well as a bunch of other products. Stay tuned for TWIFO. And of course, speaking of vol products, our old friends Spikes and VIX, obviously a lot of green on the screen. They're coming off today. Spikes coming into the show now at about a 1285 or so, 1290. That puts it down right at almost a full point from last week, about 0.85 or so. And our old friend VIX Cash hovering right around 1230. And, you know, Dave, I'm actually getting a little bit concerned here now because my pick for last week, from last week's show, for this week, of course, is 12.25. So I'm 0.05 away. So this is like the third week in a row I'm threatening a bullseye. I'm getting a little concerned, Dave, because I'm expecting a call at this point from the SEC at any moment. What do you think?
Or a tweet that's going to throw it off. Well, let's not say anything and jinx it. We'll see if you can make it right on the bullseye. That would be awesome.
Oh, and I think I also hear the dulcet tones or the background noise. Take your pick of the greasy meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmeline Capital. Mr. Meatball, welcome back to the program, sir. And are you too a little bit worried for me that I'm getting so many bullseyes in a row now that I'm expecting that tap on the shoulder from the regulars at any moment, sir?
See, I essentially consider these my bullseyes, not yours, because you keep stealing them from me right before I say something. You go, well, I'm going to go first.
I don't know how I could steal them from you when I get them right and go first every week, and then you go after me. Then you accuse me of stealing them from you, but I picked first. I'm not sure how that works.
Yeah, you always take my idea. You know what I'm going to say, and then you steal it. That's my running theory right now. It's the only logical explanation.
So I am telepathically reaching through the lines. I am plucking the nuggets of your volatility analysis from your brain, and then I am foisting it upon the listening audience as my own, only to mock you then. Is that's what you're saying, sir?
That is 100% exactly what I'm saying, dead on.
All right. Well, either way, I'm in trouble. Maybe the government wants to track me down for my ESP powers then. Either way, someone's coming for me. Let's distract them, Dave. You're our guest. You get pride of place out here today. A lot going on out here from a vol perspective this week. What's on your radar? What's lighting up your tape these days, sir?
Yeah, it's just it's been the same old story. I mean, if you haven't made money, if you're trading from the short side of volatility and you haven't made money in the last 2 or 3 months, then you're doing something wrong, because it's been the same story of just this downward sloping line for all of these ETPs. Really incredible the run we've been on here, and nothing can seem to kind of derail it. We'll have a little thing about the trade war every once in a while. This week we had a little thing about like farm, maybe some farm numbers not being what China had expected and what we had expected, or what we'd agreed on. You had a little pop, but besides that, it's just been smooth sailing for the short volatility trade. I mean, it's really amazing, and Contango has been way up there and building. It's a beautiful Contango term structure as far as I'm concerned.
A beautiful Contango indeed. I got to imagine these are pretty hot and heavy times for you over there on the VIX Crush front as well. I imagine a lot of people are probably seeking out some short vol content in this environment. Is that the case there, Dave?
Yeah, and there's a lot of people, coming on and saying, is this a time that I should be maybe taking a little position to the long side? And we try to discuss the pluses and minuses of doing that, and what to think about for people, because there's people from both sides of the trade over here trying to figure out how to position themselves.
That's funny you mentioned that, because I was just going to ask you, what do you do if someone shows up and has the temerity to say, hey, I want to buy some vol? Do you immediately kick them from the show and the chat? It sounds like you actually work with them to try to disabuse them of that notion gently, sir.
No, we immediately block them and make sure they never come back on the show.
You would have loved our old buddy, Mr. Schlesinger, here back on the show, who infamously said in the early days of this program that options and indeed volatility are to be sold or not sold, never bought. So, yeah, I think you two would get along famously. Of course, Mark was here. He knows good old Don S. Mr. Meatball, sir. When you're out there busy selling or not selling vol this week, what was on your radar?
Yeah, and I got to say that, there's definitely a news is out. For those of you that are saying, the president's being impeached, why is vol coming in? Well, it's now a known. And with every day, when the testimony proves to be, nothing that is going to change anyone's mind, you're going to see vol fall even further. We have China buying grains. They made a purchase. Kill vol. Earnings season's over. The Fed's out of the way. There is some of the most, vol's about as low as you could possibly expect. Really, about where you'd expect it. What continues to be fascinating is the size of the contango and the curve. The reason why these short ETPs have died is that, for the last month, VIX has been around, I don't know, between 12 and maybe 13 and a quarter. And the November future in that time went from 17 to now 12.95. So that's really what drives things. And so right now, if you're saying, well, are the ETPs going to continue to have problems? Well, if we stay with the VIX around 12 or, 12 to 13, that December future is 15.15. It's going to have to come down. And so it could be another kind of a bloodbath for VIX and VIX futures and the VIX ETPs over the next few weeks. It certainly lines up that way.
Speaking of the futures, let's get into some of that. Like I mentioned at the top of the show, we are expecting on the 18th. I haven't heard any contrary notices, so we are expecting at this point the Spikes future to go live on the 18th. So we'll keep you updated on that. I'm looking forward to hopefully having an actual future to discuss and actual trades as opposed to all the synthetic futures and hypothetical scenarios we've been discussing here on the program of late. So stay tuned for that. Hopefully by this time next week, we'll have an actual future to sink our teeth into. On the VIX futures side, as what did Dave refer to it as, the beautiful contango. It's still out there. It's still in effect. We're seeing that front future right now about almost 3/4 of a point away from the cash, that no future, the Dees future. If you go all the way out to Dees, if you have the temerity to go all the way out to Dees, you got right around, looks like about a little bit less, a little under 3 points, about 2.8 points or so out there. So interesting stuff out there in the futures side. Mark, Dave was just calling the futures curve that beautiful contango. Do you concur, sir? Is it still that luscious, beautiful contango that you love so much?
Yeah, it is. I always get concerned when there's an extra wide spread between the cash and the future. However, we do obviously have the Thanksgiving holiday coming up. That is in 2 weeks. For those of you that think that you're going to sell premium late next week and early the week of Thanksgiving, when we come in on Tuesday and the VIX is 11.5, that's the market letting you know that Thanksgiving has already been priced out, and there is no free money selling puts. So to me, I look at this curve and it's just basically pricing itself. Almost. We're not there yet, but it's getting to the point of pricing itself to December 2nd. And maybe that's a little bit of the price action we're seeing in the volatility curve.
Dave, you concur? You think the short vol trade, obviously it's already underway, and we've often joked many times here in the past on the program, if you're, like Mark said, if you're doing it the holiday week, or often it's, the afternoon of a Friday heading into a long weekend, if you're selling the vol then, you're already selling it on next week's levels at that point. The game is already gone. The house is out of the barn. It's too late by that point. So you concur we're approaching that threshold here already, sir?
Yeah, and definitely, and we're coming up onto expiration week next week for the front month future, and usually we see some the last few months we see contango up here, but the thing that's different now is the contango between month 2 and month 3. That January month coming online in less than a week, and that's up there almost at 17. So that's a big spread. That future will become part of the equation here, next Wednesday, and that's a big spread between spot and the futures, and it creates a big
spread.
It creates a big shock absorber if we get some sort of pop here. You look for these ETPs to underperform for anything other than like a monumental spike here.
I like it, a shock absorber, a volatility shock absorber. I kind of like that. I like that. I like that phrase. I may have to borrow that tape, but hopefully your licensing fees are reasonable. Let's go on out here. We mentioned the spike futures coming. It seems like a lot of people are still poised in terms of the big institutional size when it comes to the spikes options. Are still waiting for that future to come. The big ticket trades, the big ticket positions are still pretty much the same from last week. Number one, we got that 26,000 of that 1x2. Remember that DEES 1x2, the DEES 27, 18. 26,000 of the DEES 27s are number one out there with the bullet. Number two, 13,000 of the DEES 18s. Number three, 8,500 of the NOVE 27s. Number four, we've got about 4,500 or so of the NOVE 18s. And then round out the top five out there in spikes options this week are the DEES 26s. Total about 52,000 contracts open out there right now, which is kind of interesting to me, actually. I did notice this week we didn't see a lot of the large size institutional blocks going up, but we actually did see a fair number of smaller prints going up out there this week, which was interesting to see and kind of fun. Look at it, 6 lots, 10 lots for your traditional mom and pop 5 lots and 10 lots are really starting to make their way out there right now, including some big prints today. Actually, it looks like retail size, but still big for them. Looks like a DEES, maybe a DEES Jan roll of a DEES 1826 going out to Jan, 55 by 110 times, doing that a few times. So interesting stuff. There is some retail flow going out there, which is fascinating to see. That shows that the product's getting out there on all the brokerage platforms. People are hearing about it, maybe on a show like this or other places, and whatever reason they want some sort of alternative out there in the vol space. And we all know from listening to you and hearing from you guys that you like VIX, but you wouldn't mind having a few more players. And we all know after the VIX apocalypse back in February 2018 that a lot of players actually went off the board. So to have some new alternatives, some new options, pun intended, out there, seems like a lot of you guys, even on the retail side, are starting to respond to that. Speaking of responding, let's get out there to the mothership, the VIX options out there. It's been a pretty quiet period, except for today, and we'll get to that in a little bit. But right now, coming into today, the ADV right now, Mark, and I'm not sure if you noticed this, I chatted about this with the Rock Lops yesterday on the option block. The ADV in VIX options right now is a paltry, a meager 324,000 contracts. That's down nearly 50,000 from where it was last week. It usually stays north of 400,000. It takes a lot. It takes a protracted period of a whole hell of a lot of nothing to really drive VIX ADV substantially south of that 400K level. Yet we're at that right now. We're at about 325, which is... that's kind of more in line with like late August numbers out there, or maybe end of December in a traditional December where nothing's happening, not the last couple of years. So, Mark, are you as surprised as I that level has sunk that far? It seemed like there was support at 400K for a long time, and now we're well below that, sir.
Yeah, well, the hilarious thing is that, just as that happens, we're having one of our busiest days in a few weeks in the VIX contract. As of right now, we're recording this at 1:20 Central, 2:20 Eastern. Call that 11:20 Pacific. I don't, Mountain Time people, figure it out yourselves. And we're at 665,000 in volume right now. A lot of it in puts. I can wait to get to some of the trading, but there was a giant 5-way that went up today. And then there's been lots and lots of DEES downside that has traded today. And that's been where a lot of the volume has come from.
That's kind of the irony, is as I'm saying how anemic the volume is, today's blowing the doors off, 2x the ADV. So maybe they heard me and they're responding en masse. We'll get to all today's paper in a little bit. First, let's break down what the heck's open out there. Actually, it's pretty decent. It's about 8 million, so it's not like it's 4 or anything, anemic, yet these numbers, the ADV is just light. Let's go out there. It takes you about 137,000 contracts to break into the top 10 in VIX land these days. That would get you to the number 10 spot with the NOV 15 puts. And then we go to number 9. We've got the NOV 17 calls, $1.38 open there. Number 8, NOV 22 is 142,000 contracts open there. Number 7, the DEES 37 halves. Once again, that 37 half strike maintaining its presence out there, 143,000 there. Number 6, the DEES 22 is 156,000 open there. Number 5, back to the put side, the DEES 13 puts, 179,000 there. Number 4, the NOV 14 puts, our final put here on the list, 196,000 open there. Then we break into the 2K, the 200K, I should say, level there with number 3. 217 of the NOV 20 calls. Numero dos here, 232,000 of the NOV 30s. Number 1 with a bullet out there this week. Not even 250,000, 240,000 of the NOV 21 calls. If you've listened to this show for a while, you've been following VIX options for a while. Having less than 250,000 of the number 1 spot, that's pretty light. We've seen that number 400,000, 500,000, 600,000 easily in the past, so that's pretty light. Overall OI, though, not terribly light. It's right around 8 million. Looks like about 5.7 or so million on the calls and about 2.3 million open on the put. So that's our hot VIX positions. Let's go out there. We like to start usually I'll tell you what, Mark, since we're talking about today, usually I like to start at the front of the week and move forward, but we'll start today and move back because today is kind of where all the action is. I know you're chomping at the bit there to break down some of this paper, so have at it, sir. What's been coming across your tape today in VIX options land?
I mean, there is a whole lot of stuff going on. I think the most interesting trade we've seen today was this 5-way. They did the actually, there's kind of a couple of ones, but this was a big 5-way. The Jan 2040 call spread versus the Jan 15-18 put spread with the Jan 18 calls. We've also seen massive volume on the December 12 puts. They bought for 13 and 14 cents. Decent volume at the DEES 15 and 14 puts as well. Actually, that was a put spread. Looks like we had a 57-cent seller. So I believe that might have been a close. And then just lots and lots. Listen to the volume that we've had in NOV and DEES. November, the 13 puts have traded about 17,000. 35,000 of the 13.5 puts. In December, we've already traded 80,000 of the December 12 puts. We've traded 53,000 of the 14 puts, 23,000 of the 15s, and 22,000 of the 12.5s. So there has been lots and lots of active December trading. Most of it downside. Then, of course, as I stated, we have that kind of fun 4-way or 5-way that went up in January. Those are kind of and that was about 25,000. So plenty going on today.
I'm glad you mentioned that 5-way because that one kind of threw me for the loop. When I first thought it was 4 legs, it made some sense. It was 15-18 put spread in Jan against the 40-20 call spread going up 24,693 times. But then they threw in that extra leg, that 5th leg of the 18 calls, and that kind of threw me off for a second. So wait a minute, you're doing effectively the 18 combo now against the 15 puts and the 40-20 vertical. Do you know how this went up, what they were doing?
As I look at it, I think it actually was done as a combo. And then, so basically think of it as kind of a risk reversal type trade with the combo. So they did the futures with the call spread. So they did it as basically a combo with put and call spread. So just a really interesting, so they just a really interesting trade. And, this trade kind of makes sense if your bet is that, as kind of a short vol type trade, it's interesting. Or as a long vol trade, it's also kind of interesting. But I think this is primarily, I'd have to piece it out a little bit. But, my best guess is this short put, short future, long call spread to develop the trade. And it's, kind of an interesting spread. Let's just put it that way. I'm going to talk to Tubby and get the lowdown on exactly what they were doing while you hear back from David on this one.
There you go. Yeah, so that's definitely Dave, I'm not sure if you had a chance to see this one. This definitely came across my radar. Maybe it came across yours as well. It definitely gets my vote for one of the funkier ones we've seen. We've seen combos and synthetics go up out there. If they do, typically, if there's something else against it, then usually it's out of money call or something like that. It's not. I can't recall ever seeing anything like this where we have effectively the synthetic up against the puts and also a vertical call spread. A, Dave, did you notice this trade? B, if you did, what do you think about it in terms of parsing? Which way? What do you think they were up to? And C, are you going to piggyback this bad boy? You like this one?
Well, I mean, I saw the big prints go up, but I did not put them together as being a five-way. And I'm still kind of like writing this down and doing the math here. I did see that like the 50 grand D's 12 puts go up earlier. But yeah, that is fascinating. You know, we always have this kind of upside hedging activity in the VIX, but this downside activity, which seems to have increased a lot. I'm not the expert that Mark or Andrew is, or you are in the VIX options, but this downside activity has really increased over the last few months, and I think it's been driving the VVIX a little haywire too, because you get the increased volatility in the VIX product, but it's not because of upside call buyers. So you see the VVIX pop, and you're like, oh, upside call buyers, but it's not. It's a lot of this downside stuff, it seems like, lately. So it's really been driving that VVIX haywire and causing it to be sort of a false indicator in my evaluation of it.
Now, that's a good point. We've been so busy getting knee deep into the activity, we actually glossed right over VVIX at the top of the show. VVIX, of course, listeners, the volatility of volatility. And as Dave pointed out, it has been ticking up. It's up another 2.5 handles from our last show. It's threatening that net 90 in the 90 handle as we're speaking right now, listeners, which is, quite lofty. Let's see where we are right now. So it was at that level, and it's fascinating to see. Yeah, about 92.5 actually right now, so it's up another point from there. So that puts it up nearly 4 handles from last week. It sounds like, Dave, you're not buying what VVIX is selling. You're thinking all this downside activity is obscuring what the hell is actually going on out there.
Yeah, I mean, because we saw it pop 2 days ago, like up 3 points. It broke that 90 level, and I think most people agree that it's not like a specific level that we follow, but just a trend starting to happen. And, it got down there in the mid-80s, and then it popped up this week, but it hasn't really indicated it hasn't been preceding any sort of spike or anything as of yet. And I think it's been a lot due to this downside activity that has just cranked the volatility of the options in the VIX, but doesn't indicate upside fear. It just indicates activity. So interesting the way it's been panning out as of now.
VVIX is always one of our more solid indicators, and not from the net level, but usually when it starts trending in a certain direction, like when it trends down into the 70 handle range. That's usually a good indicator that something's about to pop off in the vol space. Vol's going to get a little bit frothier. On the flip side, when it gets north of 100, particularly into the 120 or so, that's when things are maybe a little superheated. It's worth paying attention there as well. But yeah, if it's starting to give us some false signals there, perhaps in the middle, that makes it interesting and perhaps a little bit alarming. Since we're focused on the end of the week here now, and this seems where a lot of the action is, we'll keep going backwards from here rather than jump back to Monday and roll forwards. Yesterday was also a pretty active day, so as I just spent the top of the show explaining to you how light things are in VIX options land from a net ADV perspective, yesterday and today are both lighting it up. Yesterday was 478,000 contracts, so again, north of that ADV, and 100,000 of that 478,000 contracts coming once again in a DC upside call fly. Last week we talked about one as well, so that's similar size as well. I'll have to go back and check the strike, see if our friend has actually taken this off. But either way, this was the DC 1923-27 call fly going up 25,000 by 50,000 by 25,000 times. So a little bit of call fly love out there, which we kind of talked about this a lot last week. I encourage you to check out the show last week if you heard that one. We talked about kind of our use cases for flies and how they maybe have a little bit more of a use case in VIX than they might in some other products. Kind of interesting stuff. Also saw a looks like a NOV ratio call vertical go up yesterday as well. It was a NOV 1620 going up almost 14,000 times by about almost 18,000 times, doing that for 27 cents and 8 cents respectively out there. And then there was a lot of verticals yesterday. Also, JAM call vertical was a JAM 2735 going up, 10,000 times for 31 cents. Looks like paper maybe selling that bad boy, so maybe it's an odd time to roll north if that is indeed what they're doing. But let's just assume they're putting that spread on as a straight up 1-to-1. It is not opening on either of those legs, as there is some meaty OI on both of those strikes. Out to Wednesday, we had about another light day, 304,000 contracts there. The big print looks like a funky Dees call vertical, 12,700 of the Dees 25 calls going up against 12,700 of the Dees 30 calls. Looks like they did that for about 18 cents. Paper buying that one. Pretty decent size. Also saw, looks like maybe a Nove roll, Nove 26, Dees 21, 9,200 times going up for 67 cents. It's like they're maybe dumping out the 26s and reestablishing again on the 21s, a more realistic, shall we say, strike, at least by that time frame. Tuesday, also a decently active day, 479,000. So it is surprising that the ADV has continued to erode when we had a few active days this week. A big print on Tuesday, 30,000 of the Dees 22s, or a whopping 58 cents. That's near the offer, so maybe paper lift in there. Nove 13 puts going up 22,500 times for 34 cents. Also about mid-market. If you're gonna parse VIX, you're gonna notice a couple of things. A, just about everything goes up mid-market, and B, these days in particular, a lot of things going up late. Again, I blame the Tubinator for that. I'll have to have Mark give him a hard time for me. But these went up late as well, so it kind of throws off our analysis of what the hell is going on out there. Also, the Nove 12 puts going up about 20,000 times for 8 cents, right near the offer there. So maybe a little bit of love, and looks like also some more. And again, the same strikes, I think. These are different strikes. There's Nove Dees call roll again. Nove 27, Dees 21 this time, going up on a ratio 10,450 times by 12,000 times. And then Monday was a pretty anemic day, less than 250,000 contracts going up for, it looks like the big print was a Nove, effectively strangle / risk reversal, going up 2,000 by 800 times. That was kind of the big print. Hopefully I bought you some more time there, Mr. Meatball. Have you had a chance to chat with the Tubinator? Do you have more insight, sir, into what the heck that 5-way was up to?
Yes, it is a giant short vol trade. They sold the Jan 18 straddle, bought the puts, bought the call spread. So it was not a future, but it's essentially kind of an iron butterfly where they sold the 18 straddle and collected $2.08. Believe it or not, this actually is kind of a hedge in that this trade does really well if VIX meanders its way back towards 17, 18 bucks. So this actually does kind of fit with, the concepts of some sort of upside hedge against a long portfolio. Obviously a little more specialized, but it is a short 18 straddle versus the 15-20 call stupid with a short 40 call to reduce cost. So it is a essentially bullish VIX delta, short Vega, and looking for VIX to climb marginally, not blow up.
Thank you for that color there, sir, and thank the Tubinator for me as well. I like it better as kind of a quasi-iron fly. That synthetic thing was all sorts of nonsense. So yeah, as an iron fly, I don't know why I didn't assume that off the bat that that's the way they were leaning. I think it makes a little bit more sense that way as well. So that's an interesting one. Dave, before we roll on to VXX and some of your favorite ETPs out there, anything catching your eye this week from an overall VIX options perspective, sir?
Well, let me just say that I do like that trade the way Mark found out about it. I like that. I'll participate on the side of the customer selling the straddle and the calls. I think that's an interesting trade.
Yeah, call up Tubby, say you want some. See if Tubby has 10 left over for you.
I don't think Tubby
I'll do it too lot.
Did that. I don't think Tubby did that execution,
Okay.
I'll tell you that much. But
I credit all executions to Tubby these days.
But I agree. I think it's if I was carrying a big long portfolio, that's an interesting fit with that.
Yeah, I like that.
All right, Dave, let's keep on moving out to your neck of the woods. You like yourselves a little bit of short vol, a.k.a. the former name of your show, and now the new name of your show, VIX Crush. Let's get on out to one of the most popular products people like to use to fade that vol, a.k.a. VXX, coming in yet again from our last show, as you kind of alluded to at the top of the show. You got that beautiful contango driving VXX south. It's down over a point from last show, down a point and a quarter, right around that 17.5 level right now. So things are looking robust in the short vol side of the space. Also pretty robust from a VXX options volume perspective. The ADV is a little bit shy of 250,000, about 225,000, which is pretty robust out there in and of itself. And today doing already come into showtime over 300,000 contracts, so probably even more than that now. So yeah, a pretty active day out there in VXX land. Before we get to that, let's look really quickly. What's open? What the heck are people up to? What are the hot positions right now? The big positions in VXX land. Let's look at the top 10 here. Number 10. Takes you nearly 30,000 contracts to break into the top 10 out here, which is pretty decent for VXX. 29,800 to be precise of the Jan 22s. That takes our number 10 spot. Number 9, 30,000, almost 31,000 of the D's 23 half. So getting calls back in the top 10, a fair amount actually. Number 8, the D's 18 puts, 34,000. No surprise there on that one. Number 7, Nove, 35 calls back in fashion, 34,000. We talked about these before. And those are going out today, obviously. So, yeah, that guy may be a little bit of a bridge too far. We talked about that before, how some of this OI we've seen aggregating here in VXX on the surface is a little bit sad. Hopefully this guy was leaning heavily short, and it worked out in his favor. Number 6, the Jan 22 puts, 34,000 of those bad boys. Number 5, 35, almost 36,000 of the Nove 17 half puts. Number 4, 40,000 now of the Nove 28 calls. So maybe he had a bit of a vertical on there. Let's hope. Number 3, the D16 puts, 41, almost 42,000 of those. Numero dos here, 44, almost 45,000 of the D's 27 calls. And the number 1 with the bullet position out there in VXX land right now, the Nove 18 puts. Spoiler alert, those are looking pretty good. Nearly 50,000 of those bad boys. Total of a little over 2 million out there. And today, of course, things are active. We're seeing, looks like a bit of a house money roll out there. Is the big print out there right now. We've got the D16 15 1x2 put spread going up 10,000 by 20,000 times. Why do I say it's a house money roll, listeners? Well, usually when you see these ratios with more going up on the bottom leg, that means someone's got a position that's doing all right. And I'm guessing the 16 puts probably doing all right these days. And he's rolling them down and doing 2 more of the 15 puts. So whenever we see unusual activity, usually when we see someone doing more on the second leg, that usually means they're sitting on a little bit of house money to burn. And that could probably be the case here as well. Dave, you're our short vol guy. Before we get into your favorite short vol product these days, anything catching your eye out there in VXX land this week, sir?
Well, yes, I have been more active in VXX than UVXY this week. Beyond that 1x2 that you were talking about, and I was just looking at it as a straight 1x2, kind of analyzing that. I also saw for today in the D's 20, which is the expiration cycle that I've been really active in as well. We saw somebody dumping about 10,000 of the D's 23 calls a little after the open today as well. We've just seen continuation of the this downside activity from people, and I've been participating in it. So doing spreads. So I did want to ask you guys, since I have you guys here in one place, about this trade that went up a couple days ago. I'd like to get maybe your opinions on this one. It was the 18 SEP 20 expiration cycle. There are 2 4,000 lots of calls that went up, the 27 calls and the 30 calls. And it just seemed very interesting that someone would pick that expiration, SEP 20, to trade calls. And they both happen mid-market, and I'm not sure what that's all about. I don't know. What do you think of that, Mark?
Did those go up today?
They went up 2 days ago. I know the SEP 27s went up 2 days ago. It was 257, which was mid-market. But I don't understand. It looks like it was shopped because 4,000 probably wouldn't go up mid-market unless it was shopped. But why would you pick that expiration day, SEP of 20?
Oh, yeah, I'm looking at it right now. 4,000 lot of the SEP 2730 vertical went up. It was crossed and tied. So that puts it in a little bit different light. I do love, by the way, we're getting all these great new trade tags providing so much more detail. It makes it so much better out there right now. So yeah, 4,000 lot SEP 2730. It went up for looks like 41 cents, tied, opening on both legs, and yeah, this and also crossed. So it looks like maybe they found another counterparty to take the other side of it, or maybe because that's so far out of the money, maybe more likely the firm took it down on behalf of their client, a good customer. They want to keep happy maybe. Either way, that means the crowd really not playing on this one. No liquidity providers in there on that one. So that usually, if it's that far out of the money and it's crossed, it's probably maybe the firm taking a good chunk of the other side. And yeah, that's a funky one. But this is kind of in line with what we've seen a lot of, Dave. And maybe you've noticed this too. And that's why I kind of refer to the VXXOI. When I look at it sometimes, it makes me sad because there's so much people. It used to be all crazy long-term Jan year plus puts, right? That dominated the top 10 of everything VXX. And then in the last year or so, year and a half, we've seen a lot of that moving a lot shorter term. This one is the opposite of that. It's going a little bit farther out to SEP. So maybe that's kind of interesting in of itself. But a lot of it has been, like I mentioned today, it's short term, it's going out soon, and it's probably going out worthless. I'm looking here right now. There's hundreds of thousands of contracts that are going out worthless. The 28s and the 35s, just on top of my head right now, those are just going out today. The 18 puts, good to see some puts that are short term that are actually in the money for a change, because we've seen a lot of expiration cycles where those puts are just going out worthless. So, but yeah, this one kind of feeds in. There is a core audience out there for VXX that likes their longer-term call side. In fact, I'm looking right now, 1, 2, 3, 4, half of the top 10 right now is still in the call side of the fence. So we always talk about, it's all puts all the time at VXX, but in the top 10, and in fact, in all the OI, calls are leading the dance right now. There's about 1.25 million calls open versus only about 775,000 puts. And obviously, they could be fading and selling the calls. And I don't know, looks like they may have sold this vertical as well. Let me see, $3, so right off the bid. And then looks like they did the other one for $259. It looks like they may have sold that vertical, so they could be fading some upside there. If that's the case, you're going to tie up all that for $3 of upside and that for almost a year. That makes very little sense to me. Mark, does this one surprise you at all? You have a lot of crazes in your pitch chat. I like to fade VXX in all sorts of esoteric ways. Does this ratio, or not even ratio, this vertical come across your radar? And then B, what do you think about Dave's question about the weird use cases we're seeing for VXX now?
Yeah, I mean, it's like some sort of like little blowout trade. It obviously could be against some sort of other book. It could be against some sort of timing. They have these like timing portfolios where, you're like setting investment dates and they've got to protect themselves. So you see a lot of weird stuff around some of these more unique structured products, things like that in VXX and VIX. So, it could be something like that. You never know, but what exactly it's tied to. But I guarantee it's almost certainly part of a hedge and not just a trade on its own.
That makes sense.
All right, Dave, it's that time, sir. We're getting into your neck of the woods. You are quite literally the last of the Mohegans when it comes to the UVXY traders out there. You've been steadfast in your support of this product, and you're continuing, despite the fact that it has been neutered to high heaven, it is also the product, one of the last of the Mohegans out there as well. So I can understand why you're using it. You don't exactly have a plethora of other options. You've been putting out some interesting contango updates, I've noticed, trying to keep that UVXY love alive out there. So regale us, sir. What's been going on out there in UVXY since the last time we chatted here on the show?
Well, just more of the same. We've seen upside sellers, but not a whole lot of activity in UVXY, and it's been very frustrating to trade just because the markets are really wide. I had some of the 11 puts the other day that, they should have been worth a penny, and they got marked at like $1.65. And you just get all this weirdness going on because it's such a it's such a thinly traded product now. It's very difficult to trade. I mean, if you put bids and offers in, then you can protect yourself. It's been very difficult to trade, and I've actually switched some of my stuff to VXX now just because I can get better fills with it. Just to mention for you TVIX fans out there in the other dinosaur, we are expecting to hear back probably this week about a TVIX reverse split. We're waiting on that right now with TVIX dipping almost below 7 now. And we expect to hear back on that really soon because this is the time when TVIX usually splits. But TVIX has lost like 65% of its value in 3 months and is really just getting destroyed.
I gotta tell you, Dave, you're not exactly selling me on the UVXY. I thought you'd be in here and you'd be regaling me with great tales of trades and how awesome it still is and how I am the madman for refusing to dive into those waters. But you're not exactly selling me, sir.
No, it's been frustrating it really has been frustrating the last couple of months with trying to, fight with these market makers at getting a decent fill on anything. It's been tough, really, because everything's so wide and it's hard to get filled.
All right, well, let's know what else is fascinating these days, and certainly lighting it up is earnings volatility. Let's hit a little bit of that before we get into some of your questions here. Obviously, if you like earnings vol, we've become effectively the mecca for all that stuff. TheOptionsInsider.com is the place to go. Click on that Options News and Articles tab. You'll scroll down that page. You'll see unusual activity stuff, and more importantly, you'll see our earnings move and earnings move results reports. It's all free. It's all great vol breakdowns for pretty much any name you could possibly want to trade out there. All that courtesy of our friends over there at ORATSland. Check them out as well, ORATS.com. They have all of that great data. Let's look at a few of them here. We still have some big names popping off this week, including Applied Materials and NVIDIA. Let's go to NVIDIA first because they've been typically more rocking and rolling of late. NVIDIA coming into the time of this report when this was written, which I think was the morning of the 14th, they were trading a little bit shy of 210. They were pricing in $12.71 in the past. They've averaged about 18 and a quarter in terms of their earnings move. So pretty light, which is pretty much what we've been seeing par for the course for the entire cycle so far, the entire season so far, is really just light straddles against previous moves. And let's see how we're looking out here. It seems like if that was the case, looks like the stock closed going into the earnings. Let's see, they were on the 14th actually. So let's go back out there. There we go. Stock closed going in at about close to 210. So very close to where this report was, 209.79, and looks like it sold off down in the immediate earnings blush about $6, a little more, and it has since rebounded. Is trading now down about $5. Right around 205, 204 and 3/4 or so. So if you were in that short premium side of the fence, you're doing all right now, which is kind of a bit of a narrative we've seen unfolding this cycle, which is kind of interesting. Let's see if Applied Materials played ball as well. AMAT at the time of this report was at about 57, a little bit north of that, 57.12. They were pricing in comparatively anemic $2.12 in the past. They've actually delivered less than that, so they're maybe bucking the trend out there, pricing in a little bit more juice to their straddle. They've averaged about $1.66. And let's see on this one. Coming into the earnings, they were closed. They're right around $57, so close to where this report was done. And then they gapped up here about $5, nearly 8, almost 9%. They're at about $62 right now. So that one, premium buyers, looking pretty good out there. That's one of the few names we've seen blow the doors off its straddle this cycle. That's just a few of the many names we have on here. HP, Target, looks like Lowe's, a bunch of names on here. Intuit, all broke down. If you have any pretty much ticker you like to trade that had earnings, it's there. Either it's coming up and they have an earnings move report, or they have the results report showing how it fared. Either way, it's great free volatility data. If you guys want it, and I know you do because you've been asking us for it for years, TheOptionsInsider.com is the place to go. All right, now let's get to some of your questions, a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the OptionsInsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or Facebook.com/TheOptionsInsider.
All right, everybody, we got a bunch to get to. Let's see how many we can squeeze in. Here's a good one since you're on right now here, Dave. This is right up your alley. Vince wants to know, why do you guys refer to SVXY and UVXY as neutered? Thanks for answering my question and for putting on this show every week. You're the best in the biz. Well, thank you, Vince. We love you. Right back at you. Right back at you there as well. That's me. I always call them neutered. Dave, I think you pretty much know why. Why don't you give us a quick overview of the recent history of SVXY, UVXY, what happened to them, and why they are effectively neutered products these days, sir?
Yeah, so in February of 2018, we had something that we affectionately call the Volmageddon, or the time half the people blew out, or when my customer base disappeared. And following that period, UVXY went from being a 2 times leveraged product to being nerfed. Some people might call it nerfed if you're a video gamer, down to only 1.5 times leverage. So the leverage decreased overnight. It was just announced to everybody out of the blue, which took us, I know it took both Mark, Sebastian, and I by surprise. I was long a bunch of spreads that got crushed. They changed the formula in February of 2018 for UVXY and SVXY. SVXY became a 0.5 or a half times leverage product, and UVXY became a 1.5 times leverage product, and it made them less exciting and move a lot less. So that's the story behind that.
Yeah, that one still sticks in my craw as well. I had some upside there that went the way of the dodo pretty much overnight, and I've never seen anything like it before or hopefully since. Let's see here. We got one coming in from the live chat here from It's Sleepy. He wants to know, can you guys comment on VIX calls on November 20th, 2019? How would it play with VXX? So I'm assuming, Mr. It's Sleepy, you're referring to the top OI I was just talking about in VIX land, where in the top 10 out there in VIX positions, we've got number 2 are the NOV 30 calls expiring on the 20th, as you pointed out there, 232,000 of those. Number 3 are the NOV 20 calls, also expiring on the 20th with 217,000. And then we've got the NOV 22 calls and 17 calls at number 7 and 8. Or actually 8 and 9 here at the top 10 with about 142,000 and 138,000 respectively. So some NOV contracts obviously expiring on the 20th here. So I'm assuming he wants to know what we think of those. We kind of talked about those earlier. But Mark, does this NOV upside, does this strike you as anything maybe bizarre? And he wants to know, how would this play with VXX, sir? You have anything to say here for Mr. It's, or perhaps Miss It's Sleepy?
It's Sleepy. Well, in VIX itself, if it's not upside, that's actually news, right? And it's probably most of that type of activity is unrelated to what goes on in the ETP. The ETP, that's like, I'm trying to think of a good example. That's like asking a guy in the SPX about a trade in the diamonds. They're just completely unrelated. But so I would say it has little to nothing to do with VXX and a lot to do with probably someone positioning a major portfolio to do something.
Yeah, this one kind of throws me for a loop as well, because VIX calls, that's like a day that ends in Y. VIX calls are trading, of course. That's the aberrant thing, as you rightfully point out, would be size, way downside, something like that, which we're starting to see a little bit of, and we talked about earlier in the show. But a strip of VIX calls, that's just a given week, that's kind of what throws me off about the question. Maybe if you got more specifics you want to share with us, Mr. or Mrs. It's Sleepy, you can. Meanwhile, we got to keep on rolling. It's time for the most dangerous, the most difficult, and dare I say, the portion of the show that I have perfected of late. Yes, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, you know what time it is. Time to try to wrestle, pin down those very slippery, very tricky volatility gods and nail them down for the coming week, for the end of the show this time next week. And I got to say, it's starting to get a little airy, my bullseyes here. I think this is about third week in a row, pretty close to it. We define a bullseye here as pretty much within 0.1 on the VIX side or spikes, take your pick here. And looking at show, I was at 12 and a quarter. I was exactly a bullseye, like maybe within 0.01 at the top of the show. Now I've moved them about a 0.07 away. Still well within that bullseye range. Next up was the meatball. He was south of that. He was at 11.75, and he will claim to high heaven that I drove him off that 12 and a quarter strike with my ESP beams. I knew where he wanted to go, and I got there first. But hey, you got to be the accurate one, and you can go first. And let's see. And then our buddy Simon, Mr. Ho from T3 Index last week, he was to the upside. He was playing the Russell Rhodes game. He was at 13. He did 2, actually. He did 13 for VIX cash and 13 and a quarter for spikes. And he's well out of the game, unfortunately. So I'm going to ding once again. I got to start start tracking all these victories. People ask us all the time, what is the track record? And I know recently it's been pretty awesome. But in general, we got to have a nice spreadsheet. Maybe a listener can do this for us. Nice spreadsheet of all us versus the guests and everything else, so then the meatball can have some empirical evidence for how I'm crushing him at this game. So that means, spoiler alert, Mr. Meatball, before you get all huffy, that means I get to go first. All right, so we're at about, actually, let's tick down at about a 12:15 right now out there in VIX cash land. So we're talking about things coming up, like the holiday, and a lot of other things that are starting to squeeze this vol. But as you know, if you're listening to the show to me for a while, you know I haven't been as aggressive on this fade as some others have been of late, and that's been working out for me pretty well I think last week I came in about a quarter from where we were, but that was about it. I didn't see a lot of arguments for aggressively shy of that 12 handle. Now, of course, things could happen. We could have more robust upside in the marketplace. The trade war could all be done. We could all be singing Kumbaya, and the VIX could get annihilated. I could see that, but I'm going out on a limb that there are enough other shoes out there to drop to keep us kind of where, I hate doing this because I always mock the meatball for it, but I kind of like, tell you what, I will adjust myself down. I don't want to be exactly where I was this week, so I will move it down a little bit to where we are right now, 12.15. I usually don't like doing that, but that's where I'm feeling. And Mr. Meatball, since you lost horribly, I'm going to let our guest go next, so you get to twist in the wind at the end. So, Mr. Dave, sir, what do you got for us, for our listeners here, for next week in Spikes and VIX, sir?
All right. Well, last time I got crushed, so I'm going to try again, and I'm going to go with the upside to hedge my. I'm going to hedge myself my short position and go with 13 even.
Oh, you're playing the Simon role this week. You're also 13. People have a attraction for that strike of late here on the show. A lot of people have been guessing 13 in that range. All right, Mr. Meatball, you got a nice, pretty wide market out there. 12, 15 on the downside, which is me. 13 on the upside. What are you going to do, sir? Where are you going to cart me this week?
So, all right. So, we got 12 on the downside, 13 on the up.
12, 15 on the downside.
12, 15 on the down, 13 on the up. Let's see. We're doing an episode next week, right? We
are.
Yeah. I'm gonna give one more shot in an 11 handle. Let's go 1160.
1160. All right, listeners. So you got an interesting market out here for vol for this time next, not the close, this time exactly, the end of the show next week. So right around 2 p.m. Central. So we got Mr. Meatball on the dark side there, 1160 me, kind of nice Goldilocks in the middle, 1215. And Dave playing the upside game this week, going for a nice, robust 13 handle out there in the volatility landscape. And unfortunately, that music means we come to the end of a pretty epic journey through the world of volatility. Man, we touched on everything today. We talked VIX, we talked spikes, talked the future coming up, talked the futures curves, talked that beautiful contango, talked volatility shock absorbers, we talked VXX, and even some UVXY on the show today, answered some of your questions. We'll get to more on future shows. Keep those coming. But before we go back around the horn, check in with each of you, see what you have cooking. Dave, you're our guest, so I'll start with you. If folks want to check out your VIX Crush, sir, they want to check out some short vol content for themselves, where should they go? What should they do?
Yeah, find me on YouTube under VIX Crush channel. And under The Famous Dave on Twitter. I'm active on Twitter. I'll be looking forward to answer all your questions.
There you go. The Famous Dave. He spells it a little weird, though. It's the FAMIS Dave. Apparently there's another famous Dave out there fighting for that spot on Twitter. So give him a follow on Twitter over there as well. And Mr. Meatball, you're also active on the YouTubes and on the Twitter. So if folks want to follow you, maybe they want to get some of your sweet, sweet texts throughout the day, where should they go? What should they do?
Just go to optionpit.com and check us out. You can follow me on Twitter at OptionPit. Go to our YouTube channel at OptionPit. And we're at OptionPit Abounds. So come and check it out. We wanna see you, and we wanna hear from you. And you can sign up, and we'll gladly catch up with you. So check us out.
All right, check them out. They both are pretty active on YouTube. Our content goes out on YouTube, so a lot of you I know are consuming it now on YouTube, so if you like it, that's great. Have at it. And on behalf of Mr. Meatball and Mr. Short Vol, a.k.a. The Famous Dave, a.k.a. VIX Crush, and our friends over there in the land of MIAX, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many questions. We'll get to more next week, I promise. And we'll see you back here on Monday for Option Block and all that fun stuff and crypto, and then on, of course, Thursday for TWIFO and Option Block again, and then right back here again on Friday for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.